Here's another look at how we finished the day on Wall Street. Stocks hit hard in a sweeping sell-off. It was a day where just about nothing worked for your money. But our next guest says there are three names to consider if you're looking for a place to hide out. Time to bring in Chris Verone, head of technical analysis at Strategas, a Baird company. Chris, good to see you. What are you looking at?
Great to be here, Mel. Well, first, I think we just got to put this move in a little bit of context, because this correction is not 3 or 4 days old. I mean, the average stock has actually been correcting for months and months and months. So we brought along a couple tables and a couple names where I think we can hide out and find some safety. The first thing I just want to show you, just a checkup of where we are thus far. Off the highs, both Nasdaq and S&P, both down about 5, Russell 2 down about 8. But if you go to the second table, the average stock is actually already down quite a bit more than that. The average S&P stock is down about 13% from its and the average Nasdaq stock is down about 15% from its high. The average Russell 2000 stock is down almost 30. So under the surface, the average issue has actually been correcting for months and months and months. We actually think we're closer to the end of this than the beginning. I want to show you three names in particular that I think can be bought here. And what we're really looking for is one of two things: either names that are very oversold and good uptrends, or stocks in a tough tape that are showing unusual signs of leadership or strength. We'll start in healthcare with a pharma name. This is Lilly. There's just a ton of support near 220, 225 here. You're very, very oversold. 14-day RSI is well below 30. This is a pretty good condition for pharma in general. You've seen a lot of these names get just thrown out over the last several weeks. I think Lilly and pharma more broadly is timely here. Next, I want to talk about a semi. And I think semi's still quietly been a bright spot in a tough tape over the last number of weeks. Broadcom, AVGO, quietly making 6-month relative highs versus the S&P today. So again, in a tough tape, this one is exhibiting some leadership. It's basically been sideways since January, but that's been enough over the last few weeks to exhibit some of this leadership. I think you want to be a buyer of any weakness here. It's still above its 50-day moving average. 80% of the S&P is below its 50-day. This one is still above. So it's exhibiting that type of leadership that we want to see. And then third, I think it's very curious that some of the travel stuff, some of the consumer names are actually acting better. This is Marriott, ticker MAR, actually closed on the highs today. It hasn't made a new low since July. It's breaking out in relative terms. I think you play for a rally back to 160 here as we move into the back half of the year. So three names in a market that I think a lot of stocks have actually already corrected. The only thing that really hasn't been hit enough is the index. The average stock is already down pretty sharply.
Chris, if we had you on today, and today were a completely different market day, and we were flat to higher, would you still say that these three names look good?
Yeah, I think in particular what's really notable is some of the travel stuff. Despite all the concerns about COVID and growth slowdown, these things are actually started to firm over the last couple of weeks. Marriott is an example. Expedia is one more. We've seen the airlines the last couple of days actually start to get a bid. So I'm actually very interested that some of the consumer cyclicals, some of the reopened names, some of the travel stocks in a sloppy tape are actually acting pretty well here.
Chris, good to see you.
Thanks.
Chris Verone, Strategas. Guy Adami, which name do you like of the three safety trades? Choose your adventure, as they say.
It would be Broadcom, which does come out, AVGO. They were supported on September 2nd. Operating margins were up to 58%. The street was looking for 54%, I think. So they're blowing things away on that front. By the way, I mean, you're talking about a company that has about 12% EPS growth, trading at 16 times next year's numbers, which in this world is outright cheap. I think it made an all-time high last week, 510 or so. We've pulled back a little. That would be my adventure, Mel. I know you didn't ask for that game, but I chose it myself.
Well, I asked you to pick a stock, and you did that, so good for you. Dan, same question to you. Which one do you like?
Yeah, I'm going to play a different game. Expedia, I liked. And Chris did mention Expedia, but, that thing is supposed to get back to pre-pandemic revenues maybe next year. They're supposed to grow at least 25%. Earnings are expected to be up fairly nicely off of a small loss this year. This one looks interesting to me. It closed up today, like Chris mentioned, in the Marriott. I like this one. Good balance sheet, reasonable valuation, and obviously when the pandemic's behind us, this thing's going to rip.